direction, I have to say.
Let me ask you though, don't you think they can accelerate once they have that public company capital and they have that confidence in the marketplace? Can't that accelerate like we saw with Facebook? And all of a sudden that revenue slowdown starts to go in the other direction?
You know, we haven't seen that necessarily that much with the companies that have gone public, Zynga, Groupon, even Facebook. They haven't been able to buy growth once they have that IPO cash. And there's no obvious big acquisition targets here. Twitter has been a very active acquirer already. The fourth most active acquirer of private tech companies, according to the last crypto M&A private company tech research report. So they've been acquiring. They've had Cynthia from Morgan Stanley over, top M&A banker. They've been acquiring Mopub. They just bought for $300 million. Buying their way to growth. I don't know if that's the story here.
Hang on a second. I'm going to give you a fix your earpiece, by the way, Sam, because I want you to hear what Mike Pachter says, who's on the phone. Mike, do you agree with Sam's assessment here?
No, I think probably not a toddler, but they're definitely still pre-adolescent. I mean, I just looked you up. You have 19,000 followers. What the hell is wrong with you? I have 35,000. So, I mean, we're just barely starting to see, celebrities like you and me on Twitter actually attracting followers.
People probably mad at you for your Netflix call. That's why they're following you. You probably get a lot of negative tweets.
It. But my point is that, that we barely scratched the surface of all the interesting people who could be posting on Twitter. And I think those are going to attract more users. If you ask around anybody over 40, I'd say 80% of them have never been on Twitter, and 80% of people under 20 have. This is a news source, and this is a way to have a conversation with people that you admire or you're interested in, and you just don't get that anywhere else. So I think these guys have a model that's impossible to replicate. They have a couple of 100 million monthly active users. There's 2.4 billion people on the internet. I would venture a guess that 2.3 billion of those people are interested in something, and that something is going to find its way onto Twitter, and I think it's a good place for those people to follow topics or people that they're interested in.
Yeah, well, what I'd say, Michael, though, is did you notice that Western world and U.S. traffic user growth is now almost flat, just over 11% year over year in the most recent quarter, and all the growth is coming from developing countries. And how do you monetize an Iranian revolution? I mean, Starbucks is not going to want to target that. So revenue is slowing, and usage growth in the Western world where the money is made is almost now flatlined.
I mean, the answer to your question, how you monetize the Iranian Revolution, is the way any news organization monetizes. And I know that most of them don't make a lot of money. CNBC, I wasn't kidding, CNBC just discovered Twitter. I literally have had just about every personality on CNBC promoted to me in the last 2 weeks. I think that there are tons of organizations that are just starting to use this thing. Tech writers have been using it, but conventional media, not so much. You're just starting to see hashtags in television programming. You're starting to see breakouts on shows like The Voice, where they actually have the media room and they talk about tweets and broadcast them real time. That just started. The Amplify product started just a couple of months ago. I think that's a gold mine for Twitter. So I don't agree with you at all. I think these guys will probably double their U.S. users in the next 3 or 4 years, and I think they'll probably double their overall usage in the next 3 or 4 years. So I think it's really a growth story.
And just so you're aware, I mean, I don't know how, maybe you don't follow at CNBC, Mike, but we've been on Twitter for a while. It's become a pretty significant part of what we do at CNBC, just to push back there.
No, you guys just don't promote. You just started promoting it, though. I mean, that's what I said. You started paying for slotting, which I think is really fascinating, that the guys who do the ad spend for CNBC just figured out that Twitter's a good place to advertise.
Well, what I'll say, though, on the developing countries, though, is that we crunched the numbers at Privco last night, and Twitter only generates 33 cents per timeline view, per page view for non-U.S. users. That includes a lot of the Western world, too. 33 cents, and the cost of delivering that page is 51 cents. So the question is, there is a question, how do you monetize, people in Africa, people in Libya, people in Egypt? And if they're getting 33 cents a page, those are lost users. And that explains their high server cost.
Michael, I'm going to let you go. But you should get your facts straight on what we're doing with Twitter. We'll talk to you soon.
Yeah, and in fact, I make 2 points. Number one, there may be inverse correlation to the value you deliver on Twitter, witnessed by the 40 million founders that Bieber has and the 7,000 that I have. That's number one. Number two, it's too early to call a death in the growth line of Twitter. It takes a while for the marketplace to realize how to use it, to effectively use it, and that's when they'll drive revenues in mobile. And
Sam, wasn't the big knock on Facebook that, hey, they're not going to be able to monetize mobile? And then if you look at a chart from their last earnings release, their mobile monthly users are going straight up every single quarter they put out. So if you look at a company like Twitter, what's out there to make you think that they won't be able to do the same, to increase the mobile users, and then also, as Facebook's doing, to be able to monetize it?
Well, the problem is that, look, Twitter does not have as much of a problem as Facebook had, and Facebook still has, and frankly, Google, Yahoo, AOL, they're all facing the same issue, which is just a limitation of the platform of that small screen. Twitter, 140 characters, it's a much more limited space, but they were designed and made for mobile. So they're in a much better position than those companies, but I will say, if you dig into the numbers, it shows that they make more money from Twitter.com per page than they do on the mobile device, which means the fact that their mobile usage is growing as well is actually a negative to their revenue generation.
Sam, thanks so much.
Okay.
All right, it's good to talk to you. You guys are going to be buyers of this IPO?
I mean, I'm biased, but I would probably buy it on day one. I don't think I'd commit a huge amount of capital. I wouldn't be shocked to open at a double and then still have room to run because I think it's that early.
But what about the question of the broader social space, right? Yelp, Pandora, Groupon, LinkedIn, the stocks that have had these huge gains already this year. Throw Facebook in there too.
There's one discussion here only that needs to be had. If you're starting to value these things based on profits when they're 1 and 2 years old, you're not getting it. The discussion is which of these is a defensible moat. Which company, which I believe LinkedIn and Twitter fit the category, cannot really be competed with. Something like a Yelp, you could probably compete with. So that's the one discussion you need to make because you're not going to buy any of these at a cheap valuation.
All right, coming up, it's been a big year for IPOs, but do any of these newly public companies belong in your portfolio? And from a solar company that's popping to a real estate play that's dropping. We've got the winning trades on today's biggest movers when we come back.